What is going on, investors? Back again, another stock analysis. Today, we're taking a look at IBM by request. This company just reported earnings just moments ago, and we can see here that the stock is reacting very nicely to the performance of the company. It has ticked up about 5, almost 6% here in the after hours. This is a stock been around obviously a long time, probably a lot longer than even some of you guys that are watching this video right now. Forward dividend yield is actually really nice. It'll take a little bit, this is probably not up to date. It'll take a little bit lower tomorrow, but it's in that 5% range, which is actually pretty nice. And then if you look from a price to earnings ratio, this is a stock that's priced at 12. You compare this to Amazon or Netflix or some of these other stocks, certainly Tesla, this is really low and really affordable. So is there some value here? Let's take a look at the most recent numbers. So this were just hot off the press, just came out just moments ago here. We got 3 months ended here, 19 and 20, and then they give us a 6-month view here, 19 and 20 as well. Now, the thing to notice is that their largest business here, this global technology services, this is a business that has been on decline for a while, and it continues to be on decline. But I think what's exciting for investors is this cloud and the cognitive software. This is ticking up, and it's actually ticking up, not at lightning speed here, but it is ticking up nicely. And even more impressively is take a look at these margins down here. So we got the cloud and cognitive margins are 77% compared to their largest business, this global technology services. That's let's call it a 35% margin business. So the margins are actually essentially double what their largest business is. And I think that's what's getting investors excited after hours is, yes, this business is on decline. There'll still be a market for this type of service, but this cloud business is growing and the margins are absolutely succulent. So we get to a total revenue when you factor it all in at an $18 billion clip. Again, that compares to a $19 billion clip. So they lost about $1 billion off their top line. Now, from a 6-month view, it's a similar perspective. They were at 37 billion, and we're down to call it maybe even 36 billion. So it is falling in line. It's actually a very consistent business. I think that's why when you look at the stock chart of this company, we had this low, like most stocks made this really big low, but it's been trading kind of flat here for a while. And even if you stretch this company out, look at how flat, relatively flat, this stock has traded over a pretty long period of time. And so I think if you're thinking about investing in IBM or you want to invest, this is not going to react like a Tesla or an Amazon. It's just not the nature of their business, but you are getting paid, close to 5%, over 5% on a dividend, and you're getting it at a relatively decent price compared to earnings. Speaking of earnings, let's take a look at those. We come down here. We'll slide down to net income here. Again, this is our 3-month view here. Maybe I'll zoom it out just one tick here. So we've got our 3-month view here. We made 1.3 billion. Net income slid considerably. Let's zoom in actually again on these expenses. So we see again, revenue dropped by $1 billion, but we had our expenses actually increase. A lot of that, it looks like to me, is getting piled into this R&D because these SG&A expenses actually went down on the quarter. And so that's I wouldn't say that's impressive, but that's a good sign because this R&D, if it does yield more products, more services that they can generate nice yield from, then that would be a positive for investors. On the 6-month view, we see that these expenses are ticking up nicely. Even at the G&A level, we're seeing almost all these expenses tick up quite a bit here. So coming down to net income, we were at 4 billion 6 months ended last period. Now we're down to 2.5 billion. We were at 2.5 just in the last quarter, and then quarter year over year quarter, and now we're down to 1.3. So that, but obviously the investors aren't really worried about that. So I personally wouldn't be worried about this net income number. It's really the growth of this cloud and this cognitive services business, because that I believe is going to become the number one revenue generating segment of this company, and at a 77% margin, it should more than replace the kind of losses or the lost business that you're seeing in their current number one business model. So that is not bad. We're seeing shares staying relatively stable. This is why I'm not a huge fan of. I'm going on a tangent here. Not a huge fan of stock buybacks, because here's when you buy back your stock right here. But these companies are much better at developing products instead of buying stocks. But an aside there. So we move down to the balance sheet. How well is this company capitalized? They've got a lot of cash on the balance sheet. A lot assets remained relatively stable in the quarter. Again, this is a stable business. I wouldn't expect anything otherwise here. This is giving us a year-end view here in 2019 and kind of a 6-month window into things. Assets stayed relatively steady. There's nothing that's jumping out to me on this. Now, from the liability side, this is going to keep a lid on the stock a little bit. We've got this long-term debt. This is not something that you see particularly maybe with a Microsoft or an Adobe or an Apple. Apple has a lot of debt, and some of these companies have lots of debt, but they also have way more cash than this company. This company has 12 billion in cash and 40 billion dollars in current assets. And they have a lot of outstanding assets, so 154 billion, but they've got a fair amount of long-term debt here. We've got some that is current as well. So not as financially healthy as you'd like to see with some tech stocks, but it's not overly alarming, but it will keep the valuation in check a little bit because they are going to have to service this debt actually considerably over the next few years as well. But it's not going to be I don't want you to make it seem like that's going to be a burden to the company, but it will overhang it just slightly. Now, their cash flow statement is pretty thin here. So we've got net cash provided by operating activities. This is a cash flow generating machine. Look at this. We saw that net income tick down, but we see that this, free cash flow is relatively stable. And then we see here, we've got some dividends coming out here, and again, the net income was 1.4 billion, but when you're doing 2.2, call it even almost 2.3 billion on the cash flow side, this dividend should be safe for the time being, as long as they don't want to maybe pull this dividend back for some reason and reinvest in the business. I don't think they're going to do that. I think the dividend is relatively safe, since that is pretty much what you're going to be buying when you're buying a IBM. So there we go. IBM, $112 billion market cap. It is ticking up very nicely in the after hours. We'll see if this holds. We'll see what the conference call has to bring. I can anticipate this stock will probably continue to trade up in the after hours. Where would I like to buy this stock? There's some demand here at the 134, and actually you see the stock is probably going to hit its head on this 130 mark, because you see whenever this stock trades down, it's close to that 130, 140 mark. And so I think there's going to be some level of resistance there, and if it manages to pop out, you might have upside into the 150s, maybe even I would say 150s, 160s with this stock. So this is a stock, I don't think you've got huge upside in it, but I think your downside, again, we can look at the March low, was 110. I think your downside in this is 110, 115, and your upside's probably up into the 140s, 150s. So if you're a conservative investor and you want to add like a tech company to that, I don't think you're making a bad decision here. You're getting this at a good price to earnings ratio. You're getting a good dividend. Their number one gross margin business is growing nicely. It's not out of this world, amazing growth, but it is growing. And I think these margins should, even though you've got competitors like Google and Microsoft and Amazon in this space, I think those margins should stay intact. And they've got quite a book of business that they can sell to as well. This is a company that's been around a long time. They've got lots of contacts. They've got new management, new CEO. So it might be an interesting stock. This one's definitely going to go on my watch list. I'm going to see how it performs tomorrow, see how it trades in the coming weeks and months ahead. Might add few shares here at some point. Hopefully you enjoyed this video. We'll be back again this week, all this week actually, with more earnings. We've got Tesla. We've got lots of good earnings this week. Coca-Cola, I think tomorrow as well. There's going to be lots of videos. Stay tuned for them. If you have any suggestions, leave them below. Hit that subscribe button. That really helps the channel, and that like button as well. Thanks for tuning in. Good luck with your investments.